Hello traders, and welcome back to Explain the Charts. Today is September 28th, 2025, and we're diving deep into the USDCAD, also known as the loonie. There is a lot of bullish momentum in this pair, and we'll start by looking at the fundamental reasons why before we jump into the technicals. First and foremost, we're seeing a significant divergence in monetary policy between the two nations. The Bank of Canada recently reduced its key policy rate on September 17th, pushing it to a three-year low, which has made the Canadian dollar the clear underperformer among major currencies. This move was driven by rising unemployment in Canada and concerns about economic performance. In stark contrast, the U.S. Federal Reserve has been perceived as less dovish than markets anticipated. Despite a recent rate cut, the Fed has signaled a more cautious path forward, which has led to a squeeze on U.S. dollar shorts and a general strengthening of the greenback. This dynamic is further supported by stronger-than-expected U.S. macroeconomic data, including an upward revision of Q2 GDP growth. Looking ahead, traders are keenly awaiting the upcoming U.S. personal consumption expenditures, or PCE, price index data, which is the Fed's favorite inflation gauge. Simultaneously, Canada's own GDP data is on tap, and any weakness there could further fuel this USDCAD rally. So, the fundamental picture is overwhelmingly favoring US dollar strength and Canadian dollar weakness, creating a powerful tailwind for this pair. Now, let's see how this narrative is playing out on the daily chart. As you can see, USDCAD has been in a clear and powerful uptrend for well over a year, consistently carving out higher highs and higher lows. A key moment in this trend was the breakout in late July 2024 above the long-term horizontal resistance at 1.3750. Notice how this level, which was once a ceiling, later acted as a solid floor for the price, confirming the bullish trend continuation. This price action aligns perfectly with the Forex.com analysis highlighting this as a key support zone. Since then, the momentum has been almost entirely to the upside, with the pair rallying to fresh monthly highs. We are currently trading just below the 1.3950 level, pushing towards the major psychological resistance at 1.4000. This 1.4000 level is absolutely critical. A decisive break above it could open the door for a much larger move. Looking at the bigger picture, the next major resistance zone to watch beyond 1.4000 is the area between 1.4151 and 1.4178, which acted as a key pivot point earlier in the year. Above that, the multi-year highs reached back in December 2024 near 1.4460 come into focus, which also aligns with some analyst forecasts for a potential ceiling near 1.4400. Let's zoom in on the price action over the past 2 months to see the recent acceleration. After a brief pullback in late August, the price found firm support and began its aggressive climb. You can see the market's direct reaction to the Bank of Canada's rate cut on September 17th. The candles following that date are predominantly bullish, showing strong buying pressure and conviction in the market. This is a classic example of technicals confirming the fundamental news, as money flowed out of the weaker Canadian dollar and into the stronger US dollar. The rally over the past 2 weeks has been particularly steep, suggesting the bullish momentum is intensifying as we approach these key resistance levels. This recent surge shows very little bearish opposition, with pullbacks being shallow and quickly bought up. Now, let's switch to the 1-hour chart to analyze the short-term structure. Here we can see the recent rally in more detail. The price has been in a very clean upward channel for the past several days. We are seeing a consistent pattern of higher highs and higher lows, which is the definition of a healthy short-term uptrend. The price is currently consolidating near the highs, trading in a tight range just below 1.3950. This consolidation could be interpreted as the market taking a breather and building energy for its next leg up. A key short-term support level to watch is the recent swing low around the 1.3900 area. As long as the price remains above this level on the hourly time frame, the immediate bias remains strongly bullish. A break below 1.3900 could signal a deeper pullback, but the overall trend would remain intact for now. Traders will be watching this consolidation for a breakout to the upside, which would signal a test of the 1.4000 level as imminent. For our day traders, let's drill down to the 15-minute chart to look at the intraday picture. Over the last 24 hours, the price action has been mostly sideways, reflecting the consolidation we saw on the hourly chart. We can define a very short-term range here, with resistance near 1.3950 and immediate support around 1.3930. This choppy, range-bound action is typical before a major news release or ahead of a test of a significant psychological level, like 1.4000. A breakout trader would look for a sustained move above 1.3958 to signal a long entry, targeting the 1.4000 area. Conversely, a break below the 1.3930 support could offer a quick scalping opportunity to the downside, targeting the next support level at 1.3900. Volume has been relatively average during this consolidation, so we'll be watching for a spike in volume to confirm any breakout from this range. Alright, let's switch back to the daily chart to recap and discuss what to look for next. To summarize, the fundamental backdrop is strongly bullish for USDCAD due to central bank policy divergence. The technical picture across all timeframes confirms this bullish bias with a clear long-term uptrend. Let's recap the key price levels you absolutely must have on your radar. Immediate resistance is at 1.3950, followed by the massive psychological barrier at 1.4000. Above that, we're watching the 1.4151 to 1.4178 zone and, ultimately, the 2024 highs near 1.4400. On the downside, immediate support sits at 1.3900. A more significant support level is the old resistance at 1.3750, which would need to break to put a serious dent in the bullish trend. Now for some unbiased scenarios. The most likely scenario, which I would place at about a 70% probability, is a bullish continuation. We'll likely see a test and eventual break of the 1.4000 level, especially if upcoming U.S. economic data remains strong or Canadian data disappoints. A sustained daily close above 1.4000 would reinforce this and set the stage for a move toward 1.4150. A second scenario, with perhaps a 25% probability, is a rejection from the 1.4000 resistance, leading to a deeper pullback. This would be more likely if U.S. data suddenly weakens. In this case, a drop below 1.3900 could see the price retest the major support at 1.3750 before buyers potentially step back in. A full-blown bearish reversal has a very low probability, maybe 5%, as it would require a complete reversal of the current fundamental narrative, which is not on the horizon. The main thing to watch for in the coming days are the US PCE and Canadian GDP data releases. They will be the primary catalysts for the next major move. That concludes our in-depth analysis of USDCAD. Remember, this is for educational purposes and is not financial advice. Always manage your risk and do your own research. If you found this video helpful, please give us a thumbs up, subscribe to Explain the Charts, and hit the notification bell to stay updated. Trade safe, and we'll see you in the next one.